The cryptocurrency market has seen one of the most brutal corrections in recent years. Will Bitcoin continue toward the downside, or will this be known as one of the most brutal bear traps ever? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the macro charts, the weekly, the daily, and the short-term time frame, as well as going over Bitcoin dominance, the total altcoin market cap, and the total market cap. We'll be discussing whether or not this recent correction is nothing more than a major bear trap, or if we're going to see a continuation lower. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. If you're interested in taking your trading to the next level, join us in VIP. In our VIP group, we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to our group chats of hundreds of members, our general chat, our trading chart education chat, our news, help, daily video, and trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more information. Go ahead and check it out, and let's dive on in. So as we can see, Bitcoin has had a cataclysmic correction, and this is by far and large one of the most brutal corrections the market has seen for a very long time, and not just for cryptocurrency, but for traditional stocks as well. We saw probably one of the largest weekly drawdowns we've seen since COVID-19 across all traditional assets and, of course, across the cryptocurrency markets. We have since seen a strong rebound in price action. If you've been following me on Twitter and Telegram, you would have known we've said that it is very likely we would see a bottom here at 49 to 47,000, and since then we saw about a 14% rally in price action. So we pinpointed that local bottom absolutely perfectly. So you jumped on board with that one. If you followed that advice, congratulations to you, a massive 14% rally. The big question is this going to be the bottom of this entire structure, or is this just a local bottom before a continuation lower? We're going to try and answer that question in the video today, as well as give you key levels you should be paying attention to, and of course going over absolutely everything else that you need to know. So with that major correction, of course, we have seen a whole bunch of liquidations occur. This is now a few days post the major correction. We can still see liquidations are still quite high, down 82%, but at 191 million. I think they reached very close, or if not just over 1 billion in total liquidations. 24-hour volume down 60% at 183 million, 92 million coming from longs, and 99 million coming from short positions in our total liquidations. Moving over to the DXY, DXY did temporarily nuke down below that support level, perfectly touching that sell side liquidity level, a level we've been talking about for many weeks now. Ever since we lost this level of support, we were discussing the possibility for a correction into that 102.3, that sell side liquidity level. This is going to be an area of support for the DXY. We do have that uptrend spanning back from July 2023, which we were likely going to come down and retest. If we're not, we're going to, well, should I say, we will likely come down to retest in the future. So I do expect the DXY to bleed out a little bit more, to come down and just touch this trend line. If we break down from that trend line, then we are expecting continuations lower, whereas this is going to be an area of support for possible bounces. So pay close attention to the DXY over here. The S&P 500 is not looking very good. Like we said, we saw a brutal correction for S&P, we saw a brutal correction for Bitcoin. The S&P 500 is not immune to what has happened in the market as a consequence of fears of recession looming again. With this mass fear, we see mass selling in all risk assets, and we've seen these risk assets come down. The most important level the S&P 500 needs to close this weekly candle above is going to be that 5,300 level. Again, we've discussed in prior videos why 5,300 is so significant. If we take a look at these prior high points, we're looking at prior high points from the point of which we broke out of the downtrend, which was January 2023. We broke out the downtrend January 2023 over here. Okay, that was our downtrending diagonal resistance. If we look at these prior established highs, we're going to go ahead and mark them out by these green horizontal levels. You can see at no point during the uptrend since the breakout of 2023 did we actually break below these prior high points until now. This is the first time in over a year and a half that we have seen a prior high, okay, a prior high break down. This is a massive indication of structural weakness and telling us that if we are unable to reclaim this level, we could actually see a high time frame downtrend develop here. So we do have to be very cautious for that. Yes, we have seen a fantastic bounce for the markets, but we are not out of the woods yet. We'll talk more about Bitcoin in just a moment. But that is the S&P 500. In today's video, we're going deep into the daily charts. We're going to be going over some technical high time frame patterns, discussing the current price action, the possibility for a continuation into a bull market 2025 onwards, and of course, the risk of a new bear market. We'll be discussing that. We'll also be going over interest rate data. We're taking a look at the total market caps, Bitcoin dominance, and more. Before we do get into it, guys, check out the links down below. If you do want 15% off your trading fees for life, which will save you literally tens to possibly hundreds of thousands of dollars, depending on how much money you trade with, sign up via the links down below for BitUnix, BingX, or BitGet for 15% off. I'll play an ad to find out more, and we'll get back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So as we can see, Bitcoin saw a massive correction. We've discussed this already, and we can see as a consequence of the markets really dropping quite heavy, the Federal Reserve have come out and talked about, why they need to really start to drop these interest rates. And, a massive reason why we saw such a brutal correction and why the fears of the recession really started to creep up is because the Federal Reserve were very slow in acting and, very slow in dropping interest rates when they had the chance to do. And it's not really too surprising. They were late to rise the interest rates. They're going to be slow to start to cut the rates. But what we could potentially see here now is two possible directions. The Federal Reserve really has two choices they can make. They can choose to turn those printers back on. They can choose to massively reduce and cut interest rates, which will likely send us into a parabolic cycle. All assets will increase over many years. Like we said, over the next 2 years, we might see some massive growth in assets. And we discussed why that is possible and why that is likely from a theoretical perspective. And we're not just saying this. If we look at the theory, the mechanisms behind how risk assets increase in value would be, again, attributed to the fact that if we were to see money start to print, if we were to see the Federal Reserve decrease the interest rates, we're inevitably going through this flow chart. The ultimate endpoint is that money flows into risk assets. So we do have that alternative. That is an option the Federal Reserve is possible to take. The other option the Federal Reserve can take is they can force a recession upon the economy. And as we know, the Federal Reserve, the government, politicians are absolutely allergic to the word recession. Even when we're in a recession, they don't want to admit it, so I do not think we're going to go down that route. The route I believe we're going to go down is that the Federal Reserve is going to turn the printers back on, they're going to massively cut interest rates, and we're going to see some massive inflation start to rise over the next 2 years. We're going to see asset prices get out of control, and we're going to see the dollar crumble. That is what I personally believe, and if we do see that, the wires option, the wise narrative you should be having in your head is that over time, regardless of what happens in the short term, risk assets are going to increase. And again, we can support that claim by the mechanisms of what drive risk assets, not only from a chart-based perspective, but from a theoretical perspective. Remember, everything is cause and effect. Prices don't go up randomly. There are reasons why the prices go up. And we see those reasons, those dominoes fall into play. We can anticipate the outcome of what is occurring. So that is that, guys. But let's get into Bitcoin. As we can see, there's a very key level on both the 3-day and the weekly chart I want to talk about today. And that is going to be, first and foremost, the weekly bear market. At what point is Bitcoin's uptrend decimated? At what point do we enter a bear market? So historically, what we have seen is that bear market tops are always going to be harder to predict than bottoms. Bottoms are much easier to predict because what we have is we have historical data at those price points, generally at which the bottom occurs. So we can use historical patterns and we can use leading and lagging indicators much more effectively to pinpoint when bottoms are in. But when tops are in, it is a little bit harder because generally tops occur at and around price discovery, and we generally don't have historical data to support that. So the indicators we're going to be talking about today are lagging indicators, but they're still effective in predicting massive percentage drawdowns for Bitcoin. So what we have seen in prior tops, we have noticed that when Bitcoin's price action breaches, by breaches we mean closes a weekly candle underneath the Gaussian channel upper band, okay? From that point onwards, that is when we enter a bear market. We saw a 71% correction the first time that occurred. We saw the second time that occurred was back in May 2018. From that point, we saw a 63% correction. If we take a look at the prior cycle in 2021, we broke into on the weekly chart right over here. From that high, we saw a 68% correction. So what we can see historically is generally when Bitcoin breaks down from the upside of the upper band of the Gaussian channel, we enter high time frame downtrends. These high time frame downtrends generally only occur after the all-time highs for Bitcoin, after the bull run tops, and generally lead to massive multi-month corrections spanning, we're looking at 50+%. So if we're looking at the current price action, if Bitcoin were to break below the Gaussian channel upper band, which we can see traveling very closely into that 49K region, a loss of that on the weekly would validate the entrance into a bear market, and we will likely see a massive correction for Bitcoin. Here is the issue, and this is the issue we've had the whole year. The economic data and economic projections, okay, what we expect to occur in the future based on the Federal Reserve's decisions around, monetary policies, and the historical, technical, and structural patterns we have seen play out prior on Bitcoin are not matching. And that is why we're seeing so many historical patterns and trends that were relevant and applicable in the last 10, 15 years or 10 years of Bitcoin's price action break this cycle. So although we could say if we break down from this level, historically we have seen these corrections and thus we are likely to do so, this may not be the case this cycle, just as many other historical patterns have not played out as per what we have seen in the past. Again, risk asset price action is influenced, or should I say all asset price action is influenced by buyers and sellers buying and selling, okay? Buyers and sellers make decisions based on economic news, they make decisions based on personal finances, they make decisions based on emotion, which is again perpetuated by the media. They also make decisions based on pure whim. Some people just gamble. There's a whole bunch of reasons people buy and sell. But one of the main drivers is of course going to be monetary policy, economic news, and most importantly, the perception of risk in a future period. And that is why the markets have rallied so aggressively on the notion that we were going to see interest rate cuts. And that is why the market crashed so aggressively when we saw the risk of a recession coming up, because a recession means no interest rate cuts. So if if we do see interest rate cuts after the point at which Bitcoin breaks below this Gaussian channel upper band, it is unlikely we will see a correction at the size of which we saw in prior cycles. It is more likely we will see a continuation and this will be a fake out. So we have to apply context to the charts. This is very important. You always need to apply context to what is happening on the charts to understand what is happening and understand whether or not this is a data point that is deviation or whether or not it is a data point you should consider at face value. So that is something you should be watching out for nevertheless, because historically it has been very, very, very significant. Another thing we are watching is going to be the 3-day candle underneath the Ichimoku cloud baseline. Now, if we take a look at the current price action, we can see right over here with 22 minutes remaining. So by the time you're watching this video, you'll be able to go through the charts and take a look. 22 minutes remaining until the 3-day candle closes, and we are sitting literally like $5 or something, like $50 underneath that baseline. What we have seen historically, and again, this is under the same premise as what we discussed with the Gaussian channel, is historical patterns, although are very applicable, we have to take with the context of what is going on in the economy. If we start to see interest rates reduce and we start to see money print, okay, the money print to turn back on, we're going to see assets rise regardless of what happens in the short term. But historically, what we have noticed with the leading span B is that every time we drop below the leading span B, we see corrections of 15 to 71%. And you can see just in this instance over here, we saw a correction for Bitcoin of 12%, the smallest correction we've seen upon a loss of a leading span B, but a massive correction nevertheless. The importance of the leading span B is that the prior time we broke above it, we entered a high time frame uptrend. Therefore, if we were to break below it, we would expect a equal and opposite reaction, the entrance into a high time frame downtrend. The high time frame downtrend with a 15 to 71% drawdown target, anywhere between this range. We are currently at 12.4, or whatever the hell it was, 12.4% drawdown that we did see. Or maybe it was a little bit more, I can't quite remember, I have to check it. But what we can see here, guys, again, historically, every single time we break below the leading span, right over here, we broke below, 20% correction. Over here, we broke below, again, that was like a 60% correction. We can go back in future or history. Over here, we saw a 16, 17% correction. We saw a 27% correction. We saw over here a massive correction of 70%. And we can keep going back. We can keep going back. Another scenario. Let's take a look if we can find another scenario of leading span B breaking down. Over here, we saw a 30% correction. We saw over here a 45% correction. So every single time we are broken down from this level, we see massive corrections for Bitcoin. Again, we have to understand that because the economic projections are not lining up with the charts, everything is out of sync, this is why we're seeing historical patterns break. So it is possible that even with the leading span B breakdown, we do see a historical pattern break. We do not see a massive correction as a consequence of this, is what we would expect in the past. We do need to take it at face value, and that means regardless of what potentially happens, you need to take it at face value and still apply massive significance to it. So the consequence of the break of the leading span B has already played out. If you remember back to our video a few days ago before this correction, we told you that a loss of the leading span B will likely result in a retest of the Gaussian channel upper band. Now, this is quite delayed, but if we drag this upwards, this is actually being retested. It's just because the Gaussian channel is delayed. You will see in a week or two from now, when the Gaussian channel moves forward, you will see that that candle will have retested this trend line. So we have basically accomplished, or we have completed the drawdown expectation as a consequence of losing the leading span B. Nevertheless, it is something to be very, very, very cautious about, because historically, when we lose this level, we see massive corrections. So let's talk about the current short-term price action and daily charts. If we zoom out, Bitcoin really has a few key levels of support remaining. So the key levels of support we're looking at is going to be the 49 to 48k level. If we lose this level, we enter what we will call a high time frame downtrend, or what we could even call is going to be a new bear market. Now, the new bear market may not be as aggressive as the prior bear markets, right? We didn't see as an aggressive bull market. It is unlikely we're going to see as an aggressive bear market. The bear market could only be 20%, 25%. We might not see a bear market that lasts 70% because we didn't see a traditional bull market. It is unlikely we see a traditional bear market. But nevertheless, if we do lose 47 to 49,000, the next level of high time frame support we are really watching is going to be this region at around 40,000 to 44,000. This is going to be that next area of support, specifically watching 41 to 42, which is going to be this area right over here for Bitcoin, this 41 to $42,000 region. If we lose 41 to 42,000, the next area of support from there is going to be the bear market resistance of the prior cycle. Again, this major area of resistance before we broke up and entered a parabolic uptrend. So these are our high time frame area of support. If you were looking to enter Bitcoin, you could spread your buys along these levels. You may not ever reach these levels again, but again, if we do reach these levels, every single one of these levels are going to be possible high time frame reversal points for Bitcoin. Something to pay attention to. Again, losses of these levels of support will likely result in corrections to the respective lower levels of high time frame supports we have just marked out on the chart for you. So moving to the daily chart, what we can see, if we want to take a look at the positives, is that Bitcoin was able to sustain within the broader descending channel formation. And now this is very important. This is more important than the leading span B, because this is going to be the structural formation of which the price action is developing within. What we can see is that even though we had this massive correction, the price was able to rebound and sustain above this support. Massive, massive, massive indication of strength. A very, very bullish thing. Provided Bitcoin remains within this channel, swings to the high and low side of the channel is expected. We could literally just see this continue until we break above or break below. And by breaking, we look for the daily. We look for that daily. The reason we're looking for the daily is because we have not seen a daily candle close above or below these levels yet, and therefore we look for the outlier to signify a change in character of the structure. So in this particular instance, if we were to close a daily below or a daily above, that to me would be a change in character, and that to me would signify a possible continuation in those respective directions. Until we break below and validate the structure, we are still in a high time frame bullish consolidation. This is a descending channel formation. The expectation is eventually this will break upwards until we get the daily close below. This is still valid. Although it's looking grim, it is still a possibility. Remember, you have to trade in possibilities, not certainties. Possibilities. Be aware of all possible scenarios and then plan for those. So that is it for Bitcoin, guys. Let's go over to the short-term price action. These are the short-term levels and resistance levels we are watching. Again, we can see right now Bitcoin has bounced from that major 52,000 low. What we are looking for next is going to be a retest of this 58.7. Break above 58.7, Bitcoin becomes short-term bullish. Okay, if we break above 58.7, this level of resistance, it's very, very likely Bitcoin will swing back upwards very aggressively and very easily. This is the danger zone. This is the worry zone. This is the struggle zone. And then below here is obviously the invalidation of the bullish side. And this is going to be pure bearish and downtrend. So we're in the danger zone, but we're not in that pure bearish downtrend zone as of right now. If we zoom into these smaller time frame charts, just like an hourly chart over here, we can see Bitcoin is struggling a little bit. We are starting to see some momentum fall off. We do have this respective uptrend. If we were to drop below this uptrend, it is likely that Bitcoin is going to see another correction to the short term, possibly back into this region before we bounce back upwards. But again, provided we sustain this low, guys, it is unlikely we go lower. If we sustain this low, we very much continue higher over here. So watch out for the short term, watch out for the higher time frame charts. Bitcoin dominance is potentially going to break through. Again, if Bitcoin dominance breaks through, Bitcoin will rise. Altcoins are going to be in a world of hurt again. Taking a look at the total, the altcoin market cap saw a massive correction, guys. A massive, massive correction. We're looking at like what? 30%, most altcoins dropping 30% in a matter of hours, some dropping 50%. I saw some altcoins down, 60% in the last week. Absolutely insane stuff. Again, descending channel formations on the total and the altcoin market. We do want to sustain above these levels. We did retest some very critical levels. The total is retesting its major support. We can see over here at the $2 trillion level. And of course, the altcoin market retested its respective major support at 4.6. So Losses of these levels would result in high time frame downtrends for both the total and the altcoin market. And again, like we said, a loss of this level would as well as result in a high time frame downtrend. So what are we seeing right here is we're seeing Bitcoin's on the edge of a cliff, and it's a very tight invalidation where technically it's still high time frame bullish. We have potential to continue higher, but if we drop much lower, it is going to be validation of those bearish triggers and the market will likely crumble. Thanks for tuning in. Catch you guys in tomorrow's video. Have a fantastic day. See you then.